Our guest today at MoneyShow is Harry Domash, publisher of Dividend Detective. Thank you for joining us.
Well, thanks for having me.
Could you give us an overview of your investment strategy?
Our investment strategy, well, we're a dividend investor, so we look for stocks that pay relatively high dividends, and we're the last of the buy and hold investors. We look for stocks that we can hold for a couple years and basically follow a value strategy. We look for undervalued stocks and try to pick them up cheap.
At the start of the year, you chose HP as your favorite stock for 2017. Since then, the shares have risen 19%. Could you explain the original rationale behind choosing this stock?
Well, Hewlett-Packard was probably the first Silicon Valley company ever. I think it was founded in 1939, and about a year and a half ago, they split it up into two companies. HP Enterprises got all the sexy stuff, the systems, fast-growing kinds of things, software and systems, and HPQ, or ticker for HP Incorporated, got the boring stuff like the printers and computers, desktop computers and laptops and printers. And it was a slow growth or even no growth expectations for that company. They put it pays a pretty good dividend, 3 to 3.5% yield, because it doesn't have any expectations for growth. But what happens is that HP had developed a 3D printer that they think is better than any other 3D printer. Now, I don't know if everybody's familiar with 3D printers. They made a big splash about 3 or 4 years ago. People thought they were going to become the next big thing, but they didn't. 3D printers are things that build products by laying down successive layers of plastic or some material and stuff. And they have found a niche for certain things, like if you're a manufacturer and you wanted to build a prototype of some product, you could use your three-dimensional printer to do it, but you couldn't use it for real manufacturing because you're too slow. So HP Inc. came out, or is developing this new line of 3D printers, and they claim they're 10 times as fast as what's on the market now, or had been on the market when we added it in January. And they feel like there's a real niche for them in real manufacturing. So when looking at it, you can see that when I looked at it in January, there's no analyst expectations that HP was going to grow, the revenues were going to grow because of this new business. They actually haven't included it in their forecast. So because the history has been so bad, in terms of 3D printer success so far. So we added HP on the premise that there's nothing to lose here. No one has any expectations for HP Inc. And anything that they do in terms of the 3D printers is going to be better than anyone expects, because no one's expecting anything. And so if you look at what causes stocks to move in the market, when stocks beat expectations, they go up, and if they disappoint on expectations, they go down. So to me, this story, the laser printer story for HP, is one that's really not going to play out until next year, because HP does about $100 billion a year in sales, so it's going to take a while, even if it is successful, for this printer to move the needle for HP, but I think there's a pretty good chance it'll happen. And in the meantime, the reason the stock has gone up this year is because HP's been doing better than people expected in their conventional businesses, including the laptop computers have really they've been growing high single digits and in terms of revenues, and some of their printer products, conventional products, have been doing better than people expected. So to summarize, we bought HP because there's really nothing to lose. They're bound to meet expectations, and if these 3D printers take off, then they could do really well. But for that, we're going to have to really wait till the end of this year till we start seeing some sales for them, and then analysts can start adding them to their forecasts.
So for our listeners, given the stock's strong performance so far this year, do you still recommend it as a buy?
I think the stock is really, in terms of the laser printers, it's a 2018 story. So yes, I think there's plenty. See, if you look at analyst forecasts for HP, you're going to see they're forecasting revenues go down around 1% next year. If these laser printers do reasonably well, they're going to have to all revise their forecasts up. That's going to make the stock go up.
This is Zach Levine with MoneyShow, and we've been speaking with Harry Domash, publisher of Dividend Detective. Thank you for your time.
You're welcome. Thanks for having me.